Okay, so now that we have understood gaps, fair value gaps, efficient places in the market, supply and demand, very strong areas of institutional activity, we now want to find ways where we can confirm these entries. And there are multiple ways to confirm these entries, and one of the ways is actually utilizing trend lines. Now, some people have different opposing beliefs on trend lines, but based on all my backtesting I've done, several countless thousands, just hours of backtesting I've done, trend lines, if when drawn properly, work very well, okay, as confirmation for trades. And I'm gonna show you guys examples of proper trend lines and when to not use trend lines. So first step, when you should use a trend line is when you see clean price action. When you should not use a trend line is when there's very choppy price action. So I'm gonna give you guys two examples here. All right, let's look at these two examples. This first example is right here. I would not draw a trend line here. This is horrible price action. This trend line right here makes no sense. This is a horrible trend line. The price is just chopping up and down. You literally cannot use trend lines. In here, in this situation, I'll be using ranges with key levels. I will not be using trend lines. But when you find clean price action, like we mentioned, efficient moves in the market where there's a clear direction with less or very little resistance, that's when trend lines work the best and perform very well. Here is a perfect example of trend lines working very well. Boom. This is a perfect example of clear price action. All these are bearish candles. Very minimal resistance going against these candles. That means price action or trend lines work extremely well in this situation. Now, the time frame you can draw for trend lines is on any time frame. You can actually draw time frame or trend lines on any time frame, higher time frames, lower time frames, multiple time frames you can draw trend lines on. Me personally, I only draw trend lines on the lower time frames as entry confirmations, okay? So, therefore, we can have multiple confluences when we're entering trades. First off, let's just draw this. We have a demand zone right here. That's first confluence. Second confluence, we are in a big higher time frame demand zone. That's second confluence. Third confluence, we have a trend break, okay? This is the way I use trend lines. I use it as a trend break. So when price is moving down, I draw my trend line above price action. I don't draw it below price action here. It doesn't make any sense. I'm waiting for a trend break, for this trend to break out of this low, going downtrend. We're waiting for a trend to break out of this downtrend. And how do you do that? With the trend line, okay? Now, there's sometimes where trend lines are a bit more inconsistent, but they are still a great indication of entry and confirmation bias when it comes to shifting market structure. So how you draw a trend line is, I'll take my trend line tool, and this is what I like to do for my settings. I like to extend my right line. So it's just less effort, but it's up to you. I extend my right line. I have my trend line here. And what I do is I take my trend line. You always start your trend line at the start of the move, unless it is an invalidated area. So this definitely comes with practice and patience and experience drawing trend lines and when you should draw trend lines and where you shouldn't. Like, for example, yes, this will be a valid trend line here, but that will be a very late entry over here. That'll be a very late confirmation. We want to look for trend lines that are valid and that also are near our entry. For example, this zone right here. We want to find zones or trend line and confirmations that are near our area of interest. Well, what can we find here? We look for a trend line. So for trend lines, I always include the wicks. I believe the wicks are very important because the wicks on 5-minute include 1-minute candles that form these wicks, and these 1-minute candles actually have bodies at these wicks. So yes, you definitely want to include wicks 100 million percent when you're drawing trend lines. The only time you don't is if there's very abnormal wicks that are like extremely big. Like, for example, this wick right here. I would not include wicks like that when drawing trend lines, but any normal wick I would definitely include for sure. So draw a trend line that's closest as possible to your zone or area of interest. That makes sense. This trend line here, I'll roughly draw it from here. The reason why is, yes, we want to draw the trend line as much as possible from the start of the move, but as time goes by, the slope changes, right, of these movements. So we can also draw a separate trend line here. We made a new, better angle trend line here because this is such an impulsive move, it messed up the slope. So this is actually a better trend line confirmation right here. We have trend line right here. Now for trend lines, when we're moving on a downtrend, I like to draw the trend lines on the top of the wicks, not the bottom. We don't want to be drawing below the move. We want to be drawing above the move, okay? And these trend lines basically represent resistance. Every time price has touched this trend line, it has acted as resistance, pushing price to continue down. Now, when you are in a bullish market or a bullish trend, it's vice versa. These trend lines will be acting as support. Every time we touch these trend lines, we are pushing up. So that is how trend lines act and how they work. And they do work well with good price action. If this really choppy price action, they don't work. But if they have good price action, it will work. All right. So right here, this is going to be our double confirmation or even triple confirmation. Two major zones and along with the trend line break. Once the zone or once this trend line breaks, what I'm looking for is price to have a body. Very important. Remember we learned about body closures and why it's so important to wait for body closures for candles? Yeah, we want to wait for a strong body close. I mentioned strong, right? We don't want to see tiny candles close above, right? That doesn't mean anything. We need a strong break, one candle to break with a strong bullish candle, okay, or bearish candle, depending if you're going up or down, that breaks out of this trend line that was previous resistance. Once we break out of this resistance, you will know this trend line is now invalidated and we have a trend line break for us. So once this trend line does break, I do enter. Now for me, I draw my trend lines usually on the 1 minute and 5 minute time frame. I exchange around both of them. It just depends on how accurate the trend lines are on each time frame. So let's go on the 1 minute here real quick though. On the 1 minute, you guys can see there's a lot of more noise. So I always start my trend lines off the 5 minute and then I go on the 1 minute to adjust them accordingly. As you guys can see here, this candle right here, this break of this trend line is not valid because it was a very weak break. It barely closed above. I need a strong break. So as you guys can see, this was basically a tiny fake out. That's the only problem with trend lines is we need to combine trend lines with other confirmations because of things like fake outs like this. This is a tiny fake out, okay? That does not count as a trend line break. We want a strong break. So again, acting as resistance, the trend line again. This candle is a valid strong trend line break right here. I would enter off the 1 minute. Again, you guys know I enter off the 1 minute, not the 5 minute time frame for the best entries. If I was entering off the 5 minute, my entry would have been up all the way up here instead of this 1 minute candle here that breaks. Remember, the 1 minute forms the story of the 5 minute. The 5 minute time frame forms the story of the 30 minute, and on and on. So we get our good entry with multiple confluences, we enter. Once we enter, I have my stop loss roughly below. So I usually have a 1 candle stop loss. So whatever size candle this is, I have my stop loss below this candle, giving enough space for room or price to breathe. Now, if there's a fair value gap, things like that, I will improve or increase my stop loss. If you want to play safe, you can have your stop loss below the previous swing low. But I don't have it there because I've backtested this several times where we do have a break of structure or trend line break as added confluence, we will continue going up without having to retest this level. So you want to be careful where you're putting your stop losses and making sure you're getting the best risk reward ratio out of your trades. And then we target these previous highs right here. And boom, we have a 1 to 12 scalp. Straight up, we have 1 to 12 scalp. Depending on how you size on this trade, this is going to be a really, really big win. This can cover 12 losses. Doesn't that sound absurd? You can win 1 out of 13 times and you'll be break even with one trade. So this is the perfect example of an excellent trend break strategy. We trend break as extra confirmation and we enter. So this is how I typically use trend lines. I don't use trend lines in any other ways aside from looking for these trend line breaks. So when price is going downhill, I'm drawing the trend line going down. Price is going up, drawing trend line going up and waiting for this trend line break. Now here's the problem with trend lines as well though. Again, like I mentioned, we have fake outs like this. We have broken out, but that was a fake out to go back up. So this is why I say you must have multiple sources of confluence. You need to have multiple confluence, okay? We have the start of the move all the way up here as our zone. So we are actually waiting for this trend line to break when it touches the zone. Once price touches the zone, we want to see a trend line break. Now, again, like I mentioned, trend lines do change slopes over time based on price action. Like we had consolidation over here, so we obviously will have a change in slope of price of the trend line. Again, you want to draw a trend line where the start of the move is for most accurate results. But again, sometimes we will have to adjust and be dynamic. So look at here. Once we had a newly formed little tiny demand zone right here, I redraw my trend line, wait for price to reach this demand zone or supply zone. And rather than entering right off of it, because supply zones may not always hold, right? These mini supply zones can easily break through. For a high win rate, we would use these as confirmations. Once price has a strong break below, I would say a strong break would probably be, this is even a retest right here. We broke And then we retested this level of support and acting as resistance, and we continue down. So you can actually enter whenever we break this trend line here. So we had a break in retest right here, and I would enter here off this bearish candle. Stop loss again above this candle right here. That's how I typically play. If it's a very small candle, I would increase my stop loss just to be more safe. And again, targeting, first target is this key level area here, just demand. And then we can continue targeting all the way down to the previous level right here if we ever reach that level. If not, of course, we have trailing stops, things like that to prevent us from taking an L trade off of a winning trade. So 1 to 10 ratio, look at that. Name any other trader that's getting 1 to 10 risk reward ratios like me that's scalping. Like scalping. We're scalping 1 to 10 ratios. We're not swing trading. Swing trading, you can easily reach 1 to 10, 1 to 20. I'm literally scalping these small moves and reaching these massive risk reward ratios. You want to know how? Because we are using multiple sources of confluences and we are using very tight stop losses because we have perfect almost entries. Very minimal drawdown. We have barely any drawdown on this trade. We merely go green. So that is one way you can use trend lines as ways to confirm your moves in your trades. So again, let me recap real quick. You can utilize trend lines as confirmation when it enters a zone. If it doesn't enter a zone, you don't want to be playing the trend line break, okay? It's a lot more risky. I would wait until price enters a zone, and if you're someone that wants to play safe, you wait for a trend line break or a break of structure. Then you enter with a tighter stop loss. If you're a regressive trader, you enter right when price touches that fair value gap or zone with the stop loss above the zone. So there's no confirmation of a trend shift there. That's why it's a lot more riskier. But that's going to be it for trend lines, man. There's other ways you can also draw trend lines, but I'm not really going to get into them because I think they're just not as accurate and don't work as well personally. Like, yes, you could draw trend lines, like just multiple places you draw trend lines. Like you really draw a trend line right here, actually, right here. As you can see, we have a trend line right here. But again, these trend lines are not really accurate. I only use trend lines as a break of structure. So that's how I use my trend lines as extra confluence to my trades.